Our most recent housing report showed the biggest decline in home sales that we have seen since June of 2020. Hi, I'm Keri White, real estate agent in beautiful Los Angeles. Welcome to Keri TV, where we talk all about the ins, outs of buying, selling, and investing in Los Angeles real estate. I'm filling you in on the latest housing report today so that you can make informed decisions. Home sales are declining, meaning the amount of homes actually selling are declining, not prices here. The driving factors for this are many things. As one knows, the insane housing market, 40% increase year over year in prices, I mean, come on. And the rising interest rates that are said to be combating inflation. Prices of everything just aren't as fun right now, are they? You're with me. Travel, groceries, gas, and the market? CAR President Otto Katrina, Bay Area real estate broker, said, "We're beginning to see signs of a more balanced housing market, with fewer homes selling above list price and homes remaining on the market a little longer than in previous months." What this tells us is there is slightly more supply, fewer and less intense bidding wars, and those who've experienced buyer fatigue may now have a window of opportunity. What about home prices? California's median home price set another record in May at $898,980, which was up 1.6% from April's median of $884,890. The May price was 9.9% higher than May of 2021. Normally, home prices are usually increasing around 3 to 5% a year. Note, these medians are mixed with the high-end market in California, which actually continued to outperform the more affordable market segments. Here's an example. The share of million-dollar homes increased for the fourth straight month and reached the highest level on record at 35.3%, while home sales priced below $500,000 dipped again in May and hit the lowest level of all time. Interesting data, right? What does it all mean? Home prices could, well, we know they are, leveling off, as the monthly gain in price appears to be moderating. The month-over-month increase of 1.6% in the May median home price was still higher, but only slightly above the long-run average of 1.1% recorded between April and May in the last 43 years. I know this is a lot of data, so I'm always available for questions and personal one-on-ones if any of this is a little overwhelming. So the number of homes that sold in May was down 30.6% this May, as I said in the beginning, which is the biggest drop since the first month of what we know was the beginning of 2020, a shutdown, as the experts are pointing to, like we said, lack of affordability, rising interest rates, and rising home prices that are breaking records month after month after month. It's time for a cool down. And the Fed is still expected to raise rates further in the second half of the year. The 30-year fixed rate mortgage could surge past 6% by year's end and lead to more affordability challenges for potential home buyers. And what about buyer demand? In mid-June, mortgage applications dropped to a 22-year low. Buyers took a step back with mortgage rates continuing to climb further and a brief decline in May. The 30-year fixed rate mortgage rate has now reached levels not seen in over a decade. Buyers are like, okay, let's slow this down a bit, which mortgage application demand is clearly proving. The total mortgage application volume fell 6.5% 2 weeks ago compared with the week prior, according to the MBA, Mortgage Bankers Association, seasonally adjusted index. But just this last week, MBA announced that mortgage loan application volume rose 4.2% on a seasonally adjusted basis from the previous week. So although we had this big drop, we're already picking back up. Purchase applications alone rose 8% from 1 week earlier, likely bolstered by an increase in the share of adjustable rate mortgages, ARM applications. With rates surging to their highest level since November 2008, the share of ARM applications jumped back to over 10% as consumers are looking for other financing alternatives to keep their cost of borrowing down. I've suggested this to many of my buyers because their rates are a lot more affordable. Overall, what are we thinking here? The housing market is getting less competitive. Thank goodness. The evidence that buyers are struggling to grapple with these challenges of rising home prices and rising rates is beginning to mount. And as you can see, the average weekly inventory of existing single-family homes has grown, and the current batch of active listings has been on the market twice as long as those homes that continue to sell. We used to see 7 to 10 days on market, and now we're seeing 14 to 20. And trust me, sellers are totally panicking about this and beginning to reduce their asking prices. Last week, the share of price reductions was nearly 30%, which was up double from the end of March. In fact, price reductions last week were already higher than the 2021 peak of 25.8%. Well, sellers could really do no wrong over the past 2 years, and maybe they were overzealous and overconfident. I can just sell for $100,000 more than my neighbor. Just line up those buyers outside. Are we seeing lines out the door right now? Not that much. Open house activity has also decelerated as well. Maybe those crazy open house multiple offer days are completely over as a once normal market starts to settle in. And you know what? People are scared about this. They're scared to be in a normal market. They need to take a look at what it means to buy and sell a home, because the last 2 years has been anything but normal. What's to come? Experts show these active home buyers are not abandoning their housing search. The demand is still strong and inventory is still below what we call a normal level. Demand will remain strong as more and more sellers come to market. This is a break in multiple offers, and it'll give buyers a less stressful buying opportunity and still allow sellers to capitalize on incredible equity gains. We're still expected to see strong price appreciation going forward, but it will be a much lower level. What we see now, this lack of frantic home buying, is healthy and normal, and it's very welcome. There's no sight unseen, waiving all contingencies, trying to close in 5 seconds to stay competitive. It's more of a return to a market where we can see a few homes in a weekend, take a couple days to think about it, and then not offer your entire soul to get the home. These wild home buying practices are beginning to stall as we return to a more normalized market with a more logical buying experience. We feel confident about this less manic environment and looking forward to chatting with our current, past, and future clients about what this all means to them. The Keri White team is all here for your personal questions, and we'd love to fill you in on how our private clients are getting their home and investment questions answered. See you next time, and subscribe below. Cheers.